Time to see what's on the radar for Greg Taylor, Chief Investment Officer at PenderFund Capital Management. And Greg, there's some energy stocks you're liking right now. We need some energy right now with the snow we're getting here. Yeah. First up, I just lost it. NextGen, right?
Yeah, and so the energy stocks in general have lagged because oil's been under pressure, natural gas hasn't really done too much. But within the energy sector, you've got uranium. And I think uranium is going to be a trend that's going to be with us for a long time. We've talked about this with the whole flip in ESG from having uranium and nuclear power looked as a bad thing to now becoming a positive thing. And with the increase of demand spending from AI, energy infrastructure is just going to be growing everywhere. We're seeing a lot of people switch to uranium and nuclear capacity is going to keep going higher throughout not just North America, but Europe and Asia as well. And in Canada, some of the best-in-class uranium deposits and companies in the world. And I think NextGen is going to be the next big deposit out there. This is an exploration story that has a mine that's being permitted right now in northern Saskatchewan. This is the largest, highest grade undeveloped uranium deposit in the world.
Is that the Patterson corridor?
It's in the Athabasca Basin, the Arrow deposit. They've done their first round of permit hearings, the next round's in February. And I think that we're going to get a big re-rating once they get these permits done in February. And with the government in Ottawa saying everything about fast-tracking mines and really getting these going, this is a perfect deposit for the government to get behind and really trying to make this project a success. They've gone a long way, and they're really on the finish, on the 5-yard line right now, and hopefully can push this through. And this is going to be a project that we probably will be a huge success for Canada. And whether it's going to be something that NextGen builds or is acquired by Cameco or some of these other neighbors, I think it's going to be a great company for the next few years.
And I was asking about the Patterson. There was just a news release out today that they're expanding their high-grade subdomain at Patterson Corridor East. They just released that this morning, so I guess.
Well, I think there's exploration beyond. They've got the Arrow deposits, the big one they're working on, but there's other targets within the same area and within the company, and I think those aren't really priced in the stock right now. So NextGen looks like a good one that can keep going, and I think has been a success, but has a lot more runway ahead of it.
Okay, next up, ISO Energy.
So very much related to NextGen. NextGen actually owns 30% of ISO Energy. This is another company with exploration projects in North Saskatchewan, but they've also got some interesting projects in the U.S. And certainly with President Trump and the Americans looking at fast-tracking production within the continental U.S., ISO has a property within the U.S. that they can actually start permitting on. And I think if you do start to see the U.S. government put more muscle behind fast-tracking these, maybe putting a floor on the uranium price to try and incentivize demand production coming, ISO's in a great spot for this. They have a property that's in Virginia, so close to where a lot of the AI data centers are. So the whole AI demand is going to keep going, and if you're looking for U.S. exposure to uranium that hasn't really run that much, ISO is a stock that should be on the radar.
And any concern, I mean, we're talking a lot about nuclear to power all these data centers and things like that. Any concern, I mean, those are 10-year setup plans to get those up and running. Any concern interest might wane?
Well, you never know, but there's also so much money being put into this, and once you get the capacity to start to build a nuclear power reactor, the uranium price you're putting in is going to be kind of marginal at the best. And once they put the capital in, billions of dollars to build these, they're not going to turn it off if demand shuts down. So I think we're going to need so much power. We're going to need nuclear gas. We're going to need solar. We're going to need wind. All of it's going to be needed as power demand keeps going. So I don't think demand's going to wane that much, or interest will either.
Okay. And the last one I'll look at Evercore.
Yeah, so switching topics here, this is more on the theme of M&A. And I do think M&A is going to be a big theme for 2026. And with that, you want exposure to the banking sector. And Evercore is one of the leading investment banks in the U.S. and globally. And as we've been seeing these big U.S. banks report in the last few days, investment banking and capital markets has been a growth area. Evercore is a pure play on this. And this is a company that did well last year, but should be setting up to do well. And anytime you're hearing big M&A themes, companies like Evercore are going to be getting a cut on this on consulting deals.
I'm just looking at some of the bank because Goldman Sachs reporting today, increasing dividends to $4.50 from $4. Morgan Stanley, just pulling them up as I'm looking at it. For Morgan Stanley, I think having a good report as well. Don't have a lot of other details on it. So the banks are looking good, aren't they?
The banks are looking good, and within the bank reporting, investment banking and capital markets has been a growth area, and Evercore is a pure play on that theme.
And any concern like the banks can get into that range? What seemed to happen with the Mag 7 the last little while? Like, they're delivering, and they're delivering above what was originally expected, but it's almost, it's so good that everybody wants it to be gooder.
Well, and that's
made
always
that
the
word
problem. It's a good word, and that's the problem that you hear when, and we're starting to see that with some of the initial reports we've got from J.P. Morgan, which was a good number, but the stock traded down, and I think that's something that happens when stocks have had such a good run last year that they're almost priced for perfection. So you need to beat to have things go higher, and you need to surprise markets, and it's hard when everything's had such a good run and it's trading at higher valuations. So earnings season can be tricky to trade around because it's all sentiment driven more than anything else. But
Seems like
but it's also things are going the right direction, and I think that's going to be a theme that's around us for the entire market, because when you've got a market that's coming off multiple double-digit positive years, valuations are getting stretched. So you need to find earnings growth, and you need to find things that are going to surprise to the upside.